Hi everyone, welcome to the webinar on the Federal Employees Group Life Insurance, which is often known as FEGLI. Today we're going to be focusing on how it now applies to American Indians and Alaska Natives due to the implementation of the Affordable Care Act. Here's what we're going to cover during this webinar today. First, we're going to help you understand what exactly the Federal Employees Group Life Insurance Program is and how it impacts you. There are two main types of insurance through FEGLI, basic and optional. We will cover the main differences between the two. Eligibility is also important as far as who is considered a spouse and who is considered a child. We're also going to cover additional opportunities for electing coverage, the different responsibilities of tribal organizations, the Office of Personnel Management, and the Office of Federal Employees Group Life Insurance. Finally, we're going to cover death claims, designating a beneficiary, and where you can go to find assistance and answers. The Federal Employees Group Life Insurance Program was founded on August 29, 1954. It is the largest group life insurance program on the planet. It currently covers over 4 million federal employees and retirees, as well as their family members. Insurance through this program doesn't build up any cash value or paid up value. Coverage through this program can continue into retirement. Enrollees can't borrow against the coverage, and there are two options for insurance, both basic and optional. So under the healthcare reform law, urban Indian organizations carrying out programs under Title V of the Indian Healthcare Improvement Act and tribes or tribal organizations carrying out programs under the Indian Self-Determination and Education Assistance Act are entitled to purchase coverage, rights, and benefits for their employees. It's important to note that current retirees cannot apply for FEGLI coverage right now. Only your current employees are eligible for this coverage. However, both part and full-time employees are eligible for coverage. Premiums will be taken out from an employee's paycheck, but your employer contributions must stay current for coverage to continue. Finally, under the new provisions that allow tribal employers to purchase FEGLI for their employees, they are considered the employing office. As such, they're responsible for paying what is typically the government share of the premiums. So this means that for basic insurance, employers have to contribute at least 1/3 of the cost. Employers can choose to pay for more, but this is the absolute minimum. So let's go over what basic insurance is. This insurance is at a level rate per $1,000 of coverage. The level premium feature means that enrollee premiums are equal for the duration of the coverage period. The rate for an individual enrollee doesn't change as they age. Younger employees pay in just as much as a retiree will. Because of this, the enrollee cost is much more predictable. The enrollee pays an average cost over the term of their coverage. The rate structure isn't necessarily flat. All enrollee rates are subject to periodic adjustments based on claims experience. But basic insurance is only available for the individual employee. It doesn't cover their families. Only optional insurance can cover families. So let's understand the costs associated with basic insurance. It uses a composite premium structure, meaning that the premium rate is the same for every enrollee, regardless of their age or their health status. So if you're a younger enrollee, you're covered by something called the extra benefit. It doubles the amount of coverage payable with no additional cost for those 35 or younger through this program. So once that enrollee turns 36, the extra benefit begins to decrease by 10% on an annual basis. By the age of 45, there's no extra benefit left. Traditionally, the cost of basic insurance is shared between the individual and the government. However, under the Affordable Care Act, the government's portion is now paid by the Urban Indian Organization now. So just to visualize what we've been talking about, this table is a different way of understanding the data. So for both the 25-year-old and the 64-year-old retiree, you see the cost of biweekly and monthly costs are the same. So while the number might change from 15 cents to 17 or 18, it changes across the board for everyone, not just someone who has a different health status or is a different age. Optional insurance is not automatic when employees choose to join FEGLI. Employees that wish to have optional insurance must do so within 31 days of when they become eligible for it. Employees are responsible for paying the entire cost of optional insurance. So the government, or now in the case of urban Indian employers, the tribal employer will not be responsible for the cost of any optional insurance that an employee elects to have. So unlike basic insurance, which is fixed, the cost changes for optional insurance based on your age. And these age-based prices are known as age bands, and they're split into 5-year groups. So option A and B are both for individual coverage. Option A is considered standard, and coverage is for a total of an additional $10,000. There's no extra benefit for this coverage, and even if you're under the age of 45. Option A is additional coverage. It is for an equal amount to 1, 2, 3, 4, or 5 times your annual rate of base pay after you round to the next even thousand. Option B is additional coverage, not option A. But so for option C, which is different than options A and B, this is for family. So if an employee elects to have this coverage for their family, you'll be able to have all of your family members eligible automatically into coverage. So for this, it is similar to option B in that you elect for either 1, 2, 3, or 4 times your multiple base rate of pay for coverage. Each multiple is equal for $5,000 for your spouse and $2,500 for each dependent child. So under option C insurance, your family can be enrolled in FEGLI, but not all family members are eligible. Spouses and children are the only individuals that can be considered family under this insurance category. So spouses now include opposite-sex spouses as well as same-sex spouses, since the Supreme Court's determination that the Defense of Marriage Act, DOMA, was unconstitutional. However, if you're common law married, you need to check within your state to see how valid that is under their coverage requirements. Children under option C coverage are defined as being adopted, recognized natural children, stepchildren, foster children, or children born outside or within a marriage. Children have to be under the age of 22 and unmarried. There is one exception for this. Children who have physical or mental disabilities that existed before they reached the age of 22 can continue to be covered through FEGLI. Now let's understand the responsibilities of the employers and the division of responsibilities through the Office of Personnel Management, the Office of Federal Employees Group Life Insurance. So the Office of Personnel Management, OPM, has various responsibilities in administering FEGLI. First, they're going to handle the contract between themselves and MetLife, who act as OFEGLI, the Office of Federal Employees Group Life Insurance. They prescribe the regulations and they set premium rates. So OFEGLI doesn't set the premium rates for FEGLI. OPM will receive the premiums from employees for participating groups and deposit them in the Treasury. The OPM management is also responsible for determining when open seasons occur, and they provide guidance to agency HR staff. It's important to know that the Office of Federal Employees Group Life Insurance is an administrative unit of MetLife. They're not a government agency. They're responsible for paying claims and arranging for conversions. They provide technical guidance on designations and trusts and evaluate all requests to enroll based on medical information, and requests to receive living benefits. So if you're an employer that's purchasing coverage for their employees, it's important to understand what your responsibilities are. You will be required to handle all of the administrative functions surrounding FEGLI enrollment, including those associated with new employees, open season, and quality life events. So the employer's share, the paymasters are not responsible for determining when open season is. That is for OPM to do. You just will be handling the administrative side associated with that. So you will have to maintain files for enrollment, designation of beneficiary, assignments, court orders, and any other relevant files. Employers have to withhold enrollee premiums from their pay and send that to OPM. Any issue conversion rights to a member when coverage is terminated because of separation at the end of the year is handled by employers. You're also responsible for certifying coverage to OFEGLI upon the death of an employee or one of their family members. Once again, I want to make sure that you understand that the government share of basic insurance is covered by employers under not the government for any tribal employer, which includes urban Indian organizations. There are additional opportunities for electing coverage. Open season, physical exams, and quality events are ways that people can join into FEGLI. Open season is also when you can change the type of enrollment plans that you have, or you can cancel enrollment. You can also apply by submitting satisfactory evidence, so a physical exam, to the Office of Federal Group Life Insurance. Finally, any quality life events can impact coverage. So those include divorce, marriage, death of a spouse, or acquiring an eligible child. Death benefits through FEGLI vary, but they can't be paid out until OFEGLI has received the claim of death benefits, which is a proof of death, and the agency certification of insurance status. Accidental death and dismemberment coverage is automatically part of basic insurance and option A insurance. But if you have options B or C, you don't have accidental death or dismemberment coverage. Benefits are payable for accidental death and dismemberment when you lose a limb or sight in one of both of your eyes by accidental means and within a year. For basic insurance, the accidental death benefits are equal to your basic insurance amount, the BIA, without the extra benefit that you might have. Any accidental dismemberment benefits are equal to half of your basic insurance amount for the loss of one limb or sight in an eye. For option A, however, accidental death benefits are equal to your coverage, and accidental dismemberment benefits are equal to half of your coverage for the loss of one limb or sight in one eye. Before I cover designating a beneficiary, you should know that it's not required that an employee designates a beneficiary, only if they want to change the order or pay someone not in the order of precedence, or if they want to change the percentages of payout. The order of precedence is as follows. First, the beneficiary is designated by your assignees, and second, to your assignees. So employees need to designate a beneficiary if they want their benefits to be paid to a person, organization, or other legal entity that's not listed in their order of precedence. Or if you want the benefits to be paid out in a different order than the order of precedence. Finally, employees will need to designate a beneficiary if they want the benefits to be paid into a trust that they've already established for their minor children, or if evidence for a dissolution of marriage or proof of valid marriage isn't readily available. So as you navigate FEGLI, it's important to know where you can find assistance from those in charge of administering the program. First, the Office of Personnel Management has a calculator, a FEGLI calculator, which can be used to determine the face value of different combinations of coverage, and you can calculate premiums for those different calculations of coverage. So it'll also show you how the different options of insurance will impact the amount of life insurance and premium withholdings, and how the life insurance will change over time as those employees go into retirement. OPM also has a vast frequently asked questions section with answers to over 100 questions, and they update this frequently based on what they get calls about, so it is pretty up to date. There's also the Office of Federal Employees Group Life Insurance, and they have a direct phone line that I've included here, which is 1-800-633-4542. It's available on weekdays from 8:30 a.m. to 4 o'clock p.m. Eastern Standard Time.